Hi there, welcome to the weekend general update for the 8th of December. And we had a pretty good night in the US on Friday night, and that certainly capped off a small gain for the week. But some interesting moves that are worth looking at, and some pretty good signs. Just a reminder, general advice only in this video. So the weekly summary, the S&P index ended up rising by 2 on the week after being down for a fair bit of it. So really, when you look back, there's been a small retracement from where we'd been earlier on, but this was the highest close in a month. So those people that are really getting excited about a market crash or a lot of downside, it's really interesting. The market has been down, the index has been down, and now it's bounced back up and is at a monthly high. It's not really the sort of action where you expect more significant downside. And we're seeing continuing strength in the Nasdaq and the Russell 2000 indices, so we'll take a look at those. The ASX gained 46 points on the week, so it continues to outperform as it has. This is a lot about the overseas money chasing yield in Australia through the banks, through Telstra. The US dollar rose on the week, and that was really just a bit of a counter trend rally because the overall direction is still down, so not a lot has changed. Bond yields shifted a little bit. Spanish bond yields were up to 5.46 and the Italian yield was steady. But when you look at European stock markets, they're actually in pretty good shape. So we'll have a look at those as well. So they're not really too concerned about what's happening in Europe at all. Gold dropped by $10 on the week, not a large move. And gold stock indices also eased a little bit. And we'll have a look at that important chart in just a minute as well. So we'll start off with the currencies. First of all, this is the US dollar index. It's been in this range between the mid 70s and the high 80s now for a little while. We've had a drop, we've had a bit of a counter trend rally, and it closed well off those highs last night. So I think that's probably it, and we'll probably see the dollar continue down. But it's quite interesting to see the dollar and also the S&P 500 rising at the same time. You normally don't see that happen. Now the S&P, as you can see, we had a dip which really started in early October, and that went through till the middle of November. We then got a rally back to the 61.8% level, and as I indicated last week, there could be two ways that this could go. If it drops below 1393, so let's call it 1390, then we've perhaps got a continuation of the downtrend for a period longer. However, if it goes above 1425 and closes up there, then that would be an indication that this leg here from October to the mid-November was counter trend, and that the main direction is up. So we're still looking at those two key levels, 1425 and around about 1390. And at the moment, it looks to me like there's enough strength and momentum for this to probably be going to the upside. That's still where my money lies at the moment. Let's have a quick look at the some of the components of that. This is the Nasdaq index, remains quite strong, as you can see. That wouldn't be the case if we had an impending larger move. And also the Russell 2000 also looking pretty good. It's rebounded very sharply as well and held those gains. So those indices would not be as positive as they are if we have had an impending significant downside in the market. Now let's look at a few of the international indices. This is the Shanghai index, which has been languishing all year, although you've got to say that this is an index that can only be owned by local Chinese, so it's not really getting any impact from overseas money at all. But they had a really solid rebound last week. Let's have a look at the German DAX. As you can see, it's been extremely strong, and even during the decline in the S&P, the DAX held up extremely well. Now it's not all-time highs, but it's not that far away. all-time highs, just a touch over 8,000, and this is now trading at about 7,500 points. And if we look at the FTSE index, we'll see the same sort of pattern, very close to medium-term highs. And again, not all that far away from all-time highs. So people talk about the doom and gloom in Europe, but if you look at the stock charts, it doesn't look anywhere near that bad. Let's move to gold. This is gold on a daily chart, but we'll take a look at a weekly, and you can see we had a really good rebound off support. We got to this double top. It's consolidating now for about 5 or 6 weeks. That's not in itself unusual. So the jury's still out in terms of the short-term direction on gold, but the longer-term direction, to my mind, is clearly to the upside. Let's look at a couple of relative comparisons. This is the Australian sector indices, and at the top here we've got the healthcare sector, which you can see is just absolutely rocketed away. That's largely on the strength of CSL. Telecoms have continued to do very well, obviously on the strength of Telstra, but then there's been quite a few others as well. And finance also done reasonably well. Down the bottom we've got energy and materials in the red, and also the small caps as well. So it's very, very clear where the momentum has been, but the healthcare sector and to a degree the telecom sector has been overbought for quite some time, so it's been very difficult to buy in there. And this is silver versus gold. You can see silver has generally been outperforming gold considerably now since about August. That continues, and I would expect to see that gap really start to widen over the next 3 months or so. And if we look at the HUI index, we had a really good run up, but you can see here that we do have an up-sloping trend line, which forms from the lows of mid-May, mid to late July, and we're not that far away from it now. Now if you look at the retracement of this run from the 24th of July, I would have thought 440 would have been about as far as this index fell. It's gone a little bit deeper than that, which brings into play this trend line. So we might just see a little bit more downside yet in gold stocks, but I think once this bottoms out and turns, then we're going to see a fairly strong run in gold stocks. Now looking at copper, which is a real indicator of the strength of the world economy, steady at $3.62 for the week, so it's been able to hold up there now for quite some time. Oil eased back a little bit, but that's really currency related, so still sitting around about $86. This is the copper chart. You can see pretty robust and only less than 20 cents off the highs. Now in terms of strategy, look, it's unchanged, and I'm primarily looking for non-resource stocks. They're really what we need. The difficulty we've had is they've generally been out of reach in terms of a good entry, so we've just got to wait for those non-resource stocks, the really high quality ones, to pull back, because they've been the real performers. Gold stocks, we're well positioned with those at the moment. We've got the best of the best identified, and we've now just got to wait for the market to basically better reflect the value in those stocks. So that's it for this week. Cheers.